This is Cece and welcome to the Orbit. It is Monday, February 26th. We've got a lazy start to the new week with the markets trading in a fairly tight range. We opened up a little bit in the green with the SPX, never really got much higher than about 0.1%. Now we have sold off a little bit being the key word. We are down about 0.1% to the downside. From a finishing the week Friday perspective, we sort of pinned near that 5,100 level, not an exact pin. I think it was about 10 points off from that. But we saw a weekly gamma example where, and we've been seeing this over the last month, where we've kind of got this staircase higher, and then the SPX will kind of hang out at some of these big round numbers. 4,900 here, we've got 5,000 here, now we're up to 5,100. And the way that has generally played out is, we've seen a little bit of a hangout by the market around those big round numbers, and then it makes a move away from that. We have seen moves to the downside coming out of that consolidation, but then we've seen buyers emerge and enough buying strength to push it up to the next big round number. That is yet to be seen if that happens again this week, but keep an eye on that pattern we've been seeing over the last month or so. We are at extremely low vol in short term, short duration. So we're looking at today, it's about 15 IV for 0 DTE. That is about a 0.3% expected move. It was basically it was under 0.4 to start the trading day, and that was sort of the weekend effect. Options get lowered in premium going into a weekend. If you see a big move Monday morning, they will correct immediately. That is not what we saw this morning. What we saw this morning was the market kind of open up flattish and options premium not really expanding. It would have to make a move intraday for that vol to get back up to, say, 20 or 21, like what we saw the last couple of days of last week, and that would keep that expected move 0.3% for the next couple of hours. The same is true for the rest of the week. We're looking at about 12 IV out to Friday. That is only a 1% expected move for the week. It's about as low as you're going to see short duration expected moves. So be very careful if you're a premium seller. This is the income from options weekly where we talk about these levels. So right now, the levels to the downside are about 57 for 0 DTE and right around 5,100 to the upside. Out to the end of the week, we've got closer to 5,000 on the downside, 50.30 right now, and on the upside, 51.30. So about 50 points in either direction in the SPX, which again is not that much. We saw moves intraday more than that last week. So be very careful if you're going out a couple of days in any sort of premium selling that this is very low vol. As a trader, you might want to wait for those moments where the market makes a move one way or the other, where at least you get a little bit more premium and potentially see a little bit more of a vol spike before that. Some of the names in the market, of course, that everybody's got their eyes on. We had NVDA last week report. We are seeing, and this is, we sort of had the double gamma pin at the end of last week on expiry Friday, even though it was only weeklies, but that was, the heavy option volume in NVIDIA because it reported last week, and NVIDIA right now is hanging out at that 800 level. So something to keep an eye on. Does it make a move up above 800? Does it kind of fail? Does this end up being 800 resistance? And does it pull back down into, say, the mid 700s or back towards 700? Or is it just consolidating for another move higher? And the rest of the market will be watching this. All those names like SMCI. We've got some reports in this space this week, including the stock AI. Other reports we see this week are, we've got a couple like Lowe's, Beyond Meat. It's a pretty heavy calendar. Check on the Options AI earnings calendars to see the day's reporting. We have Zoom today. Make sure there are no surprises there. And then, obviously be looking at those expected moves. And if there's any opportunity or risk in your portfolio on the individual name side of things. Back to SPX, as far as 0DTE, again, these are very low premium levels. It's perhaps something where if this did look like potentially a consolidation around 5,100, you're going to want to use that momentum away from 5,100 to perhaps get a little bit more premium, like on a credit put spread to the downside at this point. If you saw it up above 5,100, perhaps you use that momentum to do a credit call spread. And then again, if this looks like this pattern, you look at this pattern since Friday, and we've kind of come down, a little bit of a bounce, come down again. If we get a little bit of a bounce and then it goes down lower, that might be an indication of the market a little bit tired, wanting to pull back a little bit. And that is perhaps a momentum change, at least for a couple of days, where sort of bearish credit spreads perhaps make sense. And then obviously, of course, if you are trading directionally, looking for an intraday move or an intra-week move, volatility is extremely low on the debit put spread, debit call spread side of things.